So good morning, sir. Today we are going to revise the dividends chapter. So dividends chapter we will be covering section 123 to 127. If you are observing the previous exam question paper pattern, in every attempt he is asking one question, sir. So 6 marks, 10 marks, 7 marks, 8 marks, 5 marks, you know. On an average, we can expect 5 to 7 marks from this chapter, sir. So important from exam point of view. So easily we can expect one question that to 5 to 7 marks. And let us revise section 123 to 127. First of all, what is the meaning of the dividend, sir? Dividend is nothing but so we are investing in the company. So company will do the business with our money. Company will make the net profits. Out of the net profits, some portion is given to shareholders. That is called as the dividends of the company. So meaning means so a portion of the net profits payable to members of the company. So what is dividend, sir? A portion of the net profits payable to members of the company. It is a return on the paid up share capital. So what is the dividend, sir? Return on the paid up share capital. So if we are investing in the capital of the company, so we will expect something, no? So at the end of the year, company will derive the net profits. Out of the net profits, few portion is given to shareholders. That is called as the return on the paid up share capital. That is said to be the dividend. But if you see the definition of the dividend, very single line, sir, it is given by section 235. Dividend includes interim dividend. That's it. So there is no lengthy definition of the dividend. So dividend means dividend includes interim dividend. That's it. And power of the BOD versus power of the shareholders. But dividend is proposed by the BOD of the company, declared by the shareholders of the company. So who will propose? BOD. Who will declare? Shareholders. Can we interchange these rights? Answer is no. So power of BOD, proposed dividend. Power of members, declared dividend. So dividend is proposed by BOD, dividend is declared by the shareholders. This kind of things you can ask in the MCQ, sir. Payment of dividend compulsory or optional. But one company is there. For example, there is a company called SG Limited. The company's net profit is 100 crores, for example, or 1000 crores. So BOD decided not to declare dividend. Can shareholders demand dividend? Answer is no. So dividend is proposed only by the BOD. If BOD is not proposing, shareholders cannot ask for the dividend. So payment of dividend is optional. It will be decided by BOD whether to pay dividend or not. Decided by whom, sir? BOD. Dividend proposed by BOD can be increased by cannot increased by the members. Beta ये question exam में आया बेटा. So for example, BOD is proposing 10 rupees per dividend. कितना बेटा? BOD is proposing 10 rupees per share as dividend. Shareholders, can they increase? No. Can they decrease? Yes. Can they omit the dividend proposed by the BOD? Yes. So dividend proposed by BOD can only be decreased or reduced but not increased. ये question exam में आया बेटा. So एक दो बार आया exam में. Dividend second point, dividend proposed by BOD cannot be increased by member, can only be reduced. Exam में आया. Next, kinds of dividend. So dividend proposed by BOD is called as the proposed dividend. Say first BOD will propose dividend, then shareholders will agree that such a dividend. Shareholders may approve such dividend. So dividend proposed by BOD is called as the proposed dividend. Dividend proposed or recommended by BOD is called as the proposed dividend. BOD is proposing 10 rupees per share. Shareholders also agreeing for the 10 rupees. That will become final dividend. So proposed dividend when consented by shareholders at the AGM, it will become the final dividend. Dividend proposed by BOD, proposed dividend. Dividend agreed by shareholders, final dividend. And interim dividend. Exam में थोड़ा important बेटा interim dividend. But generally dividend is declared in the AGM. 55th AGM, dividend is declared. 56th AGM, dividend is declared. Between these two AGMs, any dividend is declared, that is called as the interim dividend. Interim dividend is a dividend declared between two AGMs. Between two AGMs, 55th AGM, 56th AGM. Between these two AGMs, dividend is declared interim dividend. Dividend declared by BOD. Generally, dividend is declared by shareholders in the AGM. But in the AGM, BOD. Final dividend is declared by shareholders. Interim dividend is declared by BOD. Remember, sir. Dividend declared by BOD for the financial year during the financial year is called as interim dividend. Such interim dividend is declared. Such interim dividend is dividend which is declared between the two AGMs. AGM. Between these two AGMs, any dividend is there, no? That is called as the interim dividend. Final dividend proposed by BOD, declared by shareholders. However, interim dividend proposed by BOD, declared by BOD itself. Important, sir. Next, Declaration of dividend at the in the AGM is an ordinary business. Declaration of dividend in the AGM is a special business. In the general meeting, two types of businesses will be there: ordinary and special. In the AGM, it is an ordinary business. In the AGM, it is a special business. Next, dividend on partly paid up shares and calls in advance. For example, face value of the share is 10 rupees. Face value of the share is 10 rupees. Paid up value of the share is only, for example, 6 rupees. Face value is 10 rupees and paid up value is only 6 rupees. Sir, dividend is return on investment. Return on investment. So, what is the face value? 10 rupees. How much you are invested? Only 6 rupees. So, dividend company will pay dividend on 6 rupees or 10 rupees? 6 rupees, sir, not 10 rupees. So, it is dividend. Dividend is the return on the investment. So, dividend on partly paid up share. Dividend may be paid in proportion to the amount, in proportion to the amount of paid up, है ना? So paid up is 6 rupees only. We will pay dividend only on the 6 rupees, but not on the 10 rupees. Generally, cards in advance are not eligible to get any dividend, extra dividend, unless authorized by articles of association of the company. Source of dividend: the company can pay dividend out of the current year profits, out of the previous year profits, current year profits and previous year profits, and money given by central government or state government, and money provided, and dividend can be paid out of the reserves. Dividend can be paid out of the credit balance available in the P&L account. So how many sources are? 5 sources. Company can pay dividend out of the current year profits. Company can pay dividend out of the previous year profits. Company can provide a dividend out of the guarantee provided by central government or state government. Company pay dividend out of the reserves. Company may pay dividend out of the credit balance available in the P&L account. So these are the 5 sources of the dividend. Nearly we have done with 20% of the chapters. Next, transfer reserves. Sir, this concept is very important. Exam it came so many times, sir. So transfers to reserves. Company may transfer such percentage of profits to reserves before declaration of dividend. But a question exam may came so many times in the exam. So for example, sir, net profits are 100 crores, for example. So generally company may transfer 20% to 20 or 30% to reserves. So remaining company may pay as a dividend. Company may pay it as a %20%. They may transfer to reserves. Remaining 80% company may pay it as a dividend. May, not compulsory, sir. Can the company pay dividend without transferring this to reserves? Answer is yes. Answer is yes. Answer is yes. Remember, sir, company may transfer certain percentage to reserves before declaration of dividend. Company can also pay declare dividend without transferring any amount to reserves. That is very important. A question exam में 3-4 बार आया बेटा. So very important. So once again I am telling you, company may means not compulsory, optional. Company may transfer any percentage to reserves before declaration of dividend. So transfer to reserves is not mandatory. Prohibition from declaration of dividend: company should not declare dividend if they are committing default in 73 and 74, that is acceptance of deposits and repayment of the deposits. If the company making the contravention of section 73, that is acceptance of deposits, and 74, that is repayment of deposits, if any contravention is there in deposits, company should not declare the dividend. Next, set off of previous year loss and depreciation. But dividend is paid out of the profits. Dividend is paid out of the profits, revenue profits. Which profits? Revenue profits, that is net profit. Company should not calculate the net profit without debiting the any losses of current year and previous year. So loss is mandatory, no, in the P&L account. So without debiting the depreciation, we should not calculate the net profits. So no company shall declare dividend unless carried over previous year losses, depreciation, and not provided in the previous years are set off against the profit of the current year. So what does it mean? Company should not calculate the net profit without debiting the depreciation and previous year losses. So first to debit the depreciation, previous year losses, then calculate the net profits. Out of this net profits, we can declare the dividend. Clear na beta? Next, payment of dividend. So to whom we have to pay dividend? Dividend is paid to the registered shareholders of the company. To whom beta? Registered shareholders of the company, or as per the order of registered shareholder. So I am the registered shareholder of the company. Generally, company will pay dividend to me only. I gave an order. I said So pay the dividend to my wife, है ना? So company will transfer my dividend to my wife because it is my order. So dividend is paid to registered shareholder or as per the order of registered shareholder or to the bankers of the company or to the joint shareholders, है ना? In case of joint shareholders, whose name first appearing in the register of members, उसको देता है बेटा. So for example, there is share number 10. Name of the shareholder Inky, Pinky, Ponky. किसको देते डिविडेंड? तो इंकी को देते बेटा, because they are the joint shareholders. In case of joint shareholders, dividend is payable to that shareholder whose name first appearing in the register of members, है ना? So dividend is paid to whom बेटा? Registered shareholder or as per his order or to the bankers of the registered shareholder, that is the to my bank account. In case of joint shareholders, it is paid to that shareholder whose name first appearing in the register of members. So how we have to pay dividend? I think this question also came 1-2 times in the exam. So not that much important, but important. This one is very important. So and this one also important, sir. Payment of dividend. Dividend cannot be increased by members, can only be reduced, है ना? Dividend proposed by BOD cannot be increased. ये भी exam में 1-2 बार आया. So this came so many times. Next, payment of dividend. So mode of payment of dividend. Dividend can be paid in cash but not in kind. Cash includes bank transfer, check also beta. Dividend is paid in cash but not in kind. Paid in cash but not in kind. Paid in cash but not in kind. Remember. So no dividend shall be payable except in cash. Only in cash it is payable. Cash includes check, DD, e-transfer also. So payment of dividend by issue of the check, electronic mode also permissible because that is also cash only. The electronic cash. You know. Issue of the bonus shares in lieu of the dividend. But along with dividend, the company can issue bonus shares. After declaration of the dividend, in the place of dividend, the company cannot issue bonus shares. You know, along with dividend, we can issue bonus shares. Bonus shares plus dividend allowed. But in the place of dividend, company cannot issue bonus shares. Issue the bonus shares in lieu of means instead of. In lieu of dividend is not permissible. So dividend plus bonus shares allowed. In the place of dividend, the company cannot issue bonus shares. So we have done nearly 40% of the chapter beta. Next, procedure for payment of the dividend. So in this page, he can ask anything important from exam point of view also. So how we have to pay the dividend beta? So amount of dividend shall be deposited in the scheduled bank in a separate bank account within 5 days from declaration. So beta, in the AGM, we have to declare the dividend. No? In the AGM, we have declared dividend plus 5 days. Plus 5 days, we have to transfer the dividend amount to separate bank account beta. So from the bank account, we will distribute dividend to all the shareholders. For example. So date of AGM. So from date of AGM, within next 5 days. How many days? Within 5 days. So number of shares in the company, for example, 1 lakh shares are there. Dividend per share is 2 rupees, for example. So 2 lakhs rupees we have to transfer it to separate bank account. Within how many days? 5 days. So separate bank account. Separate bank account. So from this bank account, we will distribute the dividend to all the shareholders. So based on number of shares, we will give it to all the shareholders. But we should do it within how many days? Within the 5 days. Yeah. Next. Within 5 days. How many days? Within the next 5 days. Yeah. Fine. Dividend should be paid within 30 days. Within how many days? Within the 30 days we have to pay dividends. So if you're observing, after date of declaration, within 5 days we have to transfer it to separate bank account. From the date of declaration, within 30 days and next 25 days. Within 30 days from the declaration, it should be paid to shareholders. So how many days we have transferred to separate bank account? To 5 days. Within how many days we have to distribute to shareholders? Within the 30 days. So dividend should be transferred to separate bank account within the 5 days from declaration. It is not applicable to government company. Dividend should be paid to shareholder within the 30 days. If it remains unpaid, unclaimed for 30 days from the date of declaration, it shall be transferred by company within next 7 days to unpaid dividend account. Which account? Unpaid dividend account. For example, beta, if it is unclaimed, if it is unpaid or unclaimed, within 30 days, within 30 days, within next 7 days, next, that means 30 days from declaration, 37 days from declaration, 30 plus 7, 37 days. So it will be transferred to unpaid dividend account in a scheduled bank, otherwise interest is liable at the rate of 12%. Within next 7 days it will be transferred to unpaid dividend account, unpaid dividend account, otherwise company liable to pay interest at the rate of the 12%. ये एग्जाम में आया बेटा, ये 12% एग्जाम में आया, एग्जाम में है ना बेटा. So we have to declare date of AGM within next 5 days, transfer to separate bank account. From that bank account within next 25 days we have to pay to shareholders, that means 5 plus 25 is equal to 30 days. In this next 30 days we are unable to pay to shareholders, no, within next 7 days transfer it to unpaid dividend account. Which account? Unpaid dividend account. First 5 days transfer to separate bank account, next 25 days pay to shareholders, that is 30 days of declaration. In this 30 days of declaration if you are unable to pay, if shareholders are not claiming, plus 7 days, next 7 days, wait 7 days, after 7 days, after 37 days of declaration, that amount should be transferred to unpaid dividend account. Separate bank account we have to open in the bank. The account name is unpaid dividend account. If you are unable to transfer the amount to unpaid dividend account, so company is liable to pay interest at the rate of 12%. ये exam में आया. Clear? Next, company shall prepare a statement within next 90 days and transfer the unpaid dividend account containing the names, last known addresses and amount of the unpaid dividend. We have to place it in the company website. So we have to wait for, after transferring it to after 37 days we have to wait more 90 days. How many days, sir? 90 days. In this 90 days also shareholder is not claiming, no one is coming to take the dividend, then company has to prepare a statement. Company has to prepare a statement. It should contain the name of the shareholder, last known address, number of shares held, amount of dividend. So all these things we have to prepare in a statement and place this statement, place it in company website. Company website. So now better one more time. So date of AGM, next 5 days transfer the amount to separate dividend, separate bank account for declaration of dividend. Next 25 days. That means 25 plus 30 is equal, 25 plus 5 is equal to next 30 days. That is from next 25 days we have to pay to shareholders. If you are unable to pay to shareholders, if it is unpaid, if it is unclaimed within 30 days from the declaration, next 7 days, that means 37 days from declaration, transfer to unpaid dividend account. Otherwise company is liable to pay interest rate of 12%. 37 days plus 90 days we have to wait next 90 days. If anyone shareholder can come, they can claim it. If they are unable to claim, then company has to prepare a statement which contains the name, last known address, number of shares held, amount of dividend, and place the statement in the company website. And if the company fails to transfer the amount to unpaid dividend account, interest is 12%. Already we have discussed. This is important. And money transferred to the unpaid dividend account remains unpaid for 7 years from the date of transfer. Such transferred amount will be transferred to Investors Education Protection Fund. So after transferring into this account, we have to wait for the 7 years. How many years, beta? 7 years. Next 7 years also no one is claiming. If no one is claiming, then we will transfer that amount of dividend and shares should be transferred to Investors Education Protection Fund. So IEPF authorities will give the receipt also, beta. Once the receipt is issued, no, company liability will comes to an end for payment of the dividend. So once again, date of AGM, next 5 days we have to open separate bank account, transfer the amount to separate bank account, next 25 days distribute to shareholders. Otherwise we have to transfer it to unpaid dividend account within the next 7 days. Otherwise company is liable to pay interest rate of 12%. After transferring it, after 37 days, wait for 90 days, shareholder can come, shareholder can claim it. If no one is claiming, no, prepare a statement containing the name, last known address, amount of dividend, etc. place in the company website. Still no one is claiming. After transferring it to unpaid dividend account, after 7 years, how many years, sir? After 7 years from transferring it to unpaid dividend account, no one is claiming, no, that shares, the dividend amount will be transferred to Investors Education Protection Fund. Then IEPF authorities will issue the receipt. Because of that receipt, company obligation to pay dividend will comes to an end. See, company will send the statement containing the details to IEPF authorities, authority shall issue the receipt to the company, and on transfer of that unpaid dividend fund, the company will be discharged from its liabilities, and no person can claim the dividend from the company once it is transferred to IEPF authorities. And all such shares also transferred to IEPF authorities. And any person who want to claim the dividend, they can go to IEPF authorities. And if the company is unable to follow above procedure, penalty for company 5 lakhs to 25 lakhs, and officer of the company 1 lakh to 5 lakhs. Clear na beta? So let us revise one more time beta all this. So after declaration of the dividend, it should be transferred to separate bank account within the 5 days. Declare within the pay within the next 30 days. Otherwise next 7 days transfer to unpaid dividend account. Company unable to transfer, no, company is liable to pay interest at the rate of 12%. And next 90 days prepare a statement, place in the company website. And we have to wait for next 7 years. Next 7 years also no one is claiming, no, that dividend will be transferred to investors education protection fund, and company will transfer the statement to IEPF authorities, shares to IEPF authorities, dividend to IEPF authorities. IEPF authorities will issue the receipt to company saying that amount is credited to IEPF. Then that receipt will discharge the company from its liability to pay the dividend. If you want to claim the dividend after 7 years, don't go to company, go to IEPF authorities. So IEPF authorities will release the such dividend and such shares also. And if the company is unable to follow above procedure, penalty 5 lakhs to 25 lakhs rupees, officers 1 lakh rupees to 5 lakhs rupees. Next concept is IEPF. Who will be there in the IEPF and who will manage the IEPF? IEPF means Investors Education Protection Fund. So it is established by central government, MCQ. So who established IEPF? Central government. So what is IEPF first of all? It's a hundi in the company. So in company some money is there, no one is claiming. So all the money who is not claiming transfer to IEPF fund. Company is there. You went to the temple. In the temple, you found some 500 rupees note. You are asking everyone in the temple whether it belongs to them. So no one is claiming the 500 rupees note. So where we have to keep the 500 rupees note? In the hundi of the temple. In the same way, some amount is there in the company. That money not belongs to company. No one is claiming also. So that amount is transferred to IEPF, Investors Education Protection Fund. So this account is maintained by Government of India. So that money will be transferred to Government of India only. So who is establishing this IEPF? Central government. So what will be transferred to this IEPF? If any money not claimed for 7 years, how many years? 7 years. JBMCQ may have a chance beta 7 years. So following sums remains unpaid for 7 years will be transferred to IEPF. That may be unpaid dividend. That can be application money received due for refund. You are applying for the shares of the company. Shares are not allotted. We have to refund the application money, but no one is claiming that application money. Deposits matured, no one is claiming. Debentures matured, no one is claiming. So that all the unclaimed money will be transferred to IEPF after expiry of the 7 years. How many years? 7 years. 7 years. 7 years MCQ. So while making the transfer to this IEPF will prepare the statement beta. So which kind of fund? Dividend, deposits, beta, and debentures, and name, last one address. Why we are unable to pay to that shareholder or debenture holder? So all these reasons they prepare in a statement. They will give it to IEPF authorities. While making the transfer to the fund, the company shall furnish the following details to the authority. So sums involved: dividend, debentures, deposits, and nature of the sums, last one address, name, amount, and reasons. Such as the particulars they will prepare in a statement that will be given to IEPF. So on transfer of the money to fund, authority will issue the receipt. Once money is credited to IEPF, no, IEPF will issue the receipt. So this money, this receipt will discharge the company to pay dividend, to declare, to pay dividend, to pay debentures, to repay deposits, whatever. So company will be discharged. So company may pay to debenture holder or shareholder. Otherwise they pay to IEPF. Once money is paid to IEPF, no, company will be discharged. And how this government will utilize this fund? Government will utilize this fund for creating the awareness among the investors or promotion of the interest of the investors. So government will utilize this amount for the education of investors, protection of the investors. Beta ye exam mein aane ka chance hai beta. So who will be there in this IEPF constitution? So it is administered by the chairman and other members not exceeding 7, maximum 7 members, and one CEO, officers and some other employees will be there. All are appointed by the central government only. So who will be there? One chairman, 7 members, and CEO, and other officers. Who will be there? Chairman, 7 members, and CEO. Chairman, 7 members, and CEO, and other officers and employees. All are appointed by the central government only. So the authority shall administer the fund and maintain the accounts as per the instructions of the CAG. Auditing also done by CAG only beta. Audit report is given in the Parliament of India. Last time, once again, it is prepared, it is made by the Government of India. Any amount remains unpaid for 7 years transferred to IEPF. So once amount is transferred to IEPF, you will completely prepare a statement, nature of the amount, last one address, name, other details. So this receipt is will given to government of IAPF authorities. IAPF authorities will issue the receipt. That receipt will discharge the company for payment of the such amount. So this amount will be utilized for education of investors, protection of the investors. It will consist of the one chairman, 7 members, CEO and other officers. So IEPF has to maintain the books of accounts as per the instructions of the CAG. Auditing also done by CAG. Audit report will be given in the Parliament of India. This is all about the IEPF, sir. Next, dividend to be held in abeyance. Abeyance means withheld beta. What is the meaning of abeyance, sir? Abeyance means withheld. So, what is the meaning of the dividends to be held in abeyance? Abeyance means stopping. Abeyance means stopping. Withheld otherwise. So, what does it mean, sir? For example, sir, there is a company called SG Limited. In this company, there is shareholder Suresh, and he transferred the shares to Ramesh. So, selling the shares to Ramesh. Shares are not yet registered. Not yet registered in Ramesh name. There is a pending transfer. There is a pending registration of the transfer. During this period, for example, the sale was happened on 10/10/25. So for example, it may be registered on, for example, 25, 10 and 25. During this period, company declared the dividend. So company को समझ में नहीं आ रहा whether to pay to dividend to Suresh or Ramesh. Suresh is not the shareholder. Ramesh name is not updated. Then company will withhold the dividend payable. So that is called as that is said to be the dividend to be held in the abeyance. And then Ramesh has to go to Suresh. Suresh has to give a written statement. Company. I sold the shares to Ramesh. Pay the dividend to Ramesh. Then company will pay dividend to Ramesh. That is the concept of the dividend to be held in abeyance. I think 1-2 times came in the exam. Not that much important. Transfer deed has delivered to the company for registration, but transfer of the shares is not yet registered in the name of the transferee. The company shall transfer the dividend in relation to such share to unpaid dividend account unless agreed by the transferor. So unless transferor agrees, so that amount will be withheld and kept in the unpaid dividend account. Once the transferor agrees, it will be paid to the transferor. Next, time limit for payment of dividend, important from exam point of view. Time limit for payment of the dividend. Dividend should be paid within how many days, sir? 30 days. Within how many days, sir? 30 days from declaration. However, exceptions. In this following exceptional cases, company need not pay dividend within the 30 days. Company is not liable even it is not paid in the 30 days. बेटा ये एग्जाम में आ रहा, बेटा आया आ रहा आता. So general rule, within how many days we have to pay dividend? We have to pay dividend within 30 days of declaration. 5 days transfer, next 25 distribution. 25 plus 5 is equal to 30 days of declaration. But companies in the following cases, companies not liable for not payment of dividend within the 30 days. First one into the dividend cannot not pay due to operation of the law. So due to by following particular law, for example, shareholder become the insolvent. Due to IBC, insolvency bankruptcy court, we are not paying the dividend because his account is freezed. Due to operation of law, the company is not paying, company is not liable. Beta, ये concept very important. This one very important. ये exam में आया बेटा, VVVIMP. Practically, he will ask that question. Also, I will explain. Shareholder has given the directions regarding the payment of dividend, but those directions cannot be complied by the company, and the same has been informed to shareholder. That's why I'm underlining that. I said to company, my dividend is there, no, transfer it to my bank account, SBI, State Bank of India, Kukatpalli branch, Hyderabad, and this is my bank account number. To this bank account number, transfer my dividend. So company transfer the dividend to that bank account, but account may be closed, account may be freezed, account number may be wrong. So due to some other reasons, company was unable to transfer the dividend to this account. So that amount will be went back to company. They will return to the company itself, the dividend, because account is not matching. The same thing we have to inform to shareholder. In the exam, he will say company is not informing to shareholder. So if shareholder is giving any directions, company has to transfer dividend as per the directions. If the company is unable to transfer as per the directions of the shareholder, the company has to inform to shareholder. But in the question he will not inform, company will not inform. ये देखो बेटा एग्जाम में आया बेटा 2-3 एक दो बार आया. Shareholder has given the directions regarding the payment of dividend, and those directions cannot be complied with because of the, and the same has been communicated to shareholder, but in the exam he will not communicate, then company will be liable. And dividend is lawfully adjusted by company. For example, what is the meaning of lawfully adjusted? Face value of the share is 10 rupees, issue value of the share is 10 rupees, called up value also 10 rupees, paid up value is only 8 rupees, there is arrears of 2 rupees, shareholder is not paying. Dividend declared also 2 rupees, company is setting off the 2 rupees for the unpaid calls, so company is not liable. Next, when there is a dispute regarding the right to receive dividend, shareholder mar gaya, he has 2 sons, three daughters, Inky Pinky Ponky are fighting for that dividend, है ना बेटा, that shares. Then company said, I will not pay dividend to all of you people, let me keep it in unpaid dividend account. Once ownership is decided, I will pay, because there is a dispute regarding the right to receive the dividend. And if the company is unable to pay due to not fault of the company, so in these 5 cases, company will not be liable for not paying the dividend within the 30 days, within the 30 days of the declaration. So here question, this one is very important, and this one also very important. Practically he is asking revocation of the dividend. This one also is asking in the exam beta. Revocation of the dividend. Generally, once dividend is proposed by BOD, declared by shareholder, it will become the right of the shareholder, liability of the company. So it cannot be revoked, general rule, but it can be revoked in 2 cases. Exam mein aaya beta. So dividend once declared becomes debt due from the company to shareholders, cannot be revoked, but it can be revoked in the following cases. If it is ultra virus paid dividend after declaration of dividend before payment, going concern is affected, है ना बेटा. If going concern is affected, if it is ultra virus dividend declared can also be revoked, है ना. Important. Interim dividend also very important beta. This one is very important, very IMP beta. What is the interim dividend term? AGM. Between 2 AGMs, 55th AGM, 56th AGM, between these 2 AGMs, if any dividend is declared by BOD, that is called as the interim dividend. Dividend declared between 2 AGMs by the BOD is called as the interim dividend. Interim dividend means dividend declared between 2 AGMs. Between 2 AGMs, AGM, between 2 AGMs, dividend is there. That is the interim dividend. Next one is important beta. In case company has incurred the loss during the current financial year up to the end of the quarter immediately preceding the date of the declaration of the interim dividend, such interim dividend shall not be declared at a rate higher than the average dividend declared by company during the previous 3 financial years. Beta, important beta. So what does it mean? (55th AGM) final dividend will be there. 56th AGM final dividend will be there, है ना. During the financial year it will have 4 quarters: quarter 1, quarter 2, quarter 3, quarter 4, है ना बेटा. April, May, June, July, August, September, October, November, December, January, February, March. 4 quarters are there. Here in the 3rd quarter company want to declare the dividend. बेटा ये question exam में ज़्यादा it came so many times beta. So here company getting the loss, here also company getting the loss, here the company want to declare the dividend, that is interim dividend. Which dividend beta? Interim dividend. Can they declare? Yes. However it should not exceed average of the previous 3 annual dividend. That means 55, 54 and 53. So this is previous to this year, previous to current year means 55th AGM, 54th AGM and 53rd AGM, है ना बेटा. Here company paid for example 30%, here company paid for example 20%, for example here company paid 30%, है ना बेटा. So 30 plus 20 50, 50 plus 30 80, for example here 40, easy calculation. 40 plus 20 60, 60 plus 30 90, 90 divided by 3 years, है ना बेटा. So current year dividend should not exceed 30%. कितना बेटा 30%. Clear na? So 40, 20, 30 divided by 3 years. This question came so many times in the exam beta. So current and losses are there. So company want to declare the interim dividend. Such interim dividend should not exceed the previous 3 AGM's annual dividend divided by 3 average. See, देखो बेटा. In case company has incurred the loss during the current financial year up to the end of the quarter, immediately preceding the date of the declaration of the interim dividend, such interim dividend shall not be declared at a higher than the average dividends declared by company during immediately preceding financial years. है ना बेटा? So 3 financial years average dividend should not be increased, and that one is very very important. So whole page is important. So all other provisions applicable to final dividend also applicable to interim dividend. Next concept is, and last concept for the this chapter beta, consequence of payment of dividend out of the capital. So generally company has to pay dividend only out of the revenue profits. Which profits are revenue profits? Company should not declare dividend out of the capital. So if the company declares dividend out of the capital, what will happen? है ना? Payment of dividend of capital amounts to unauthorized reduction of the share capital. MCQ beta आने का chance है बेटा. If the company is paying the dividend out of the capital invested by shareholder, that will amount to unauthorized reduction of the share capital, because we have to pay dividend only out of revenue profits but not out of the capital. If company pay dividend out of capital, that will amount to reduction of the unauthorized reduction of the share capital, and directors who knowingly pay the dividend out of the capital will be personally liable. So if the company pays dividend out of capital, no, we have to BOD has to repay to directors. Directors has to pay out of their own pocket, है ना? So if a company declares dividend out of the capital, directors are personally liable, and directors who have right to be indemnified by the members. So from the company, see, I will write somewhere. Company is there. Out of the company capital, director is paying the dividend to shareholder, है ना? Director has to compensate the company and shareholder has to compensate the director, है ना बेटा? Because we are paying out of the capital, no beta, not allowed. So director has to repay to company. Shareholder who receives such dividend has to compensate the director. So director is a personal liable. Directors who have they have right to be right of indemnity against the members. From the members we can indemnify directors. However, where dividends are improperly paid out of the capital have been made good out of the subsequent profits, liability will cease. For example beta, directors are paying the dividend out of the capital. Subsequent, for example, directors are taking the 50 lakhs rupees from the capital to declare dividend. Subsequently company made a profit of 60 lakhs. So 60 minus 50 set off. So we have to show net profit as only 10. So if subsequently company getting the net profit, no, so the unauthorized dividend will become the authorized. It will be set off, है ना? Where dividends improperly paid out of the capital has been made good out of the subsequent profits, the liability of the directors will cease. And the last concept, declaration of dividend out of the reserves, very important beta, very important. Generally we have to pay dividend out of the current year revenue profits. Which profits are current year revenue profits? But our company is there is no revenue profit, still they want to declare dividend. Can they declare? Answer is yes, out of the reserves. So company can pay dividend out of the reserves only in case of not availability of the revenue profits. So in the event of inadequacy or absence of the profits, in case of inadequacy or absence of the profits, company can declare dividend out of the revenue free reserves also. Which reserves are free reserves? However, we got to satisfy 4 conditions. How many conditions? 4 conditions. Those conditions are very important, and remember, sir. So the rate of dividend declared by shall not exceed the average of the previous 3 years dividend, है ना? So just now we have discussed no previous 3 years dividend 40 plus 20 plus 30, for example, divided by 3 years. So 40 plus 20 60, 60 plus 30 90, 90 divided by 3 years is equal to 30%. So average dividend declared should not exceed the average of the immediately preceding 3 years declared dividend. And second condition, the amount to be drawn from the free reserves shall not exceed the 1/10 of the total paid up share capital and free reserves. Let me write it here somewhere. Condition number 1, it should not exceed previous 3 financial year's average dividend. That is, in our example, let me take a balance sheet. Paid up share capital 70, reserves 20, other liabilities 10, 100, and fixed assets 70, current assets 30, 100. So 40 plus 20 plus 30 divided by 3 years. It should not exceed 30%. First condition, है ना? First condition, the rate of dividend shall not exceed the average of the rates of dividend declared by immediately preceding 3 financial years. That is clear. Second condition, the amount to be drawn from the free resource shall not exceed 1/10 of the paid up share capital and free resource. 1/10 of paid up share capital and free resource. Maximum amount can be drawn is 1/10 of paid up share capital plus free resource. So that is 10% of paid up capital is 70, resource is 20. So maximum we can draw 9 lakhs from this resource. So resource is 20. Out of the resource only 10% of 10 paid up share capital plus free resource. Capital is 70, resource is 20, pura 90. 90 into 10% maximum we can draw 9 lakhs. Third condition, the amounts are drawn from the reserves shall be first utilized to set up the current year loss. But if we are paying the dividend out, let us step. First use it to set off current year loss. But we are paying the dividend out of reserves because there is no current year profits. Current year profits and not the current year loss is there. For example, current year loss is, for example, 2 lakhs. So 9 lakhs we are withdrawing. First set off for the 2 lakhs current year loss. So we can use only 7 lakhs for the payment of the dividend. 7 lakhs for declaration of the dividend. So first condition, better I'm writing this because very important from exam point of view. First, the dividend should not exceed the average of the previous 3 years. Maximum we can withdraw the 10% of paid up share capital and free reserves. Third one, first set up the current year loss. So maximum 3 years, 10% of paid up share capital free reserves. So out of this 9 lakhs, first set up the current year loss. Example 2 lakhs. We can use only 7 lakhs for the declaration of dividend. Fourth condition, the balance reserves after withdrawal, shall not be fall below the 15% of the paid up share capital. Fourth condition, balance reserves should be greater than the 15% of the paid up share capital. But in our example, our reserves are 20. How much we are withdrawing? 9 lakhs withdrawing. That means the balance will be 11 lakhs. 20 minus 9 is equal to 11 lakhs. The balance reserve should be greater than the 15% of the paid up share capital. 11 lakhs should be greater than the 15% of the 70. That means 15% of 70 means 7 plus 3.5. 10.5. 11 is greater than the 10.5. So these 4 conditions should be satisfied. If I take withdrawing the reserves out, if we withdrawing the from the reserves to declare dividend, if the company want to declare dividend out of the reserves, these 4 conditions should be satisfied. But the same question he is asking in the exam. The same practical question he is asking in the exam. Beta. So whatever the example I given now, the same question he is asking, and the 4 conditions need not be satisfied if the company withdrawing the money from the P&L account. So these 4 conditions should be satisfied if you withdrawing the money from the reserves. If they withdrawing the money from the P&L account, the above conditions need not be satisfied. ये भी exam में आया बेटा. Such utilization of the profits does not amount to withdrawal from the reserves. If you are withdrawing from reserves, these conditions should be satisfied. If you are withdrawing from the P&L account, these conditions need not be satisfied. So with this we have done with the revision of the dividends chapter. This is only rapid revision. So remaining part we'll see in the next chapter. We'll see in the next video. Have a great time. Enjoy the day. Prepare well. SG signing off. Take care. Good luck.